Kevin, there's a question here about if we take advantage of the subsidy plan, do we have to pay it back? How do we show proof of revenue deduction to meet the minimum standards? And what does the subject use to will this be subject to a CRA audit at the year end? Do you want to take a run at those?
Sure. Yeah, so I mean, the answer is no. You do not have to pay the subsidy back as long as it was properly calculated and everything was on board. Obviously, if the revenue wasn't calculated properly and you can't show a 15% reduction in March, for example, then yes, you will have to pay it back. And also, if you've undertaken certain transactions to artificially lower your revenue, you could be on the hook as well for some penalties. So, the answer is no, you do not have to pay it back. As far as what you have to show, you should keep records, showing that decline in revenue between the two periods. You should keep records as to what you paid your employees, again, pre-crisis and currently. The application itself doesn't require you to submit that information today, but you should keep that on hand. Again, going back to my previous point, the most difficult issue here is trying to figure out what your revenue loss is and which sort of alternative methods you're going to use. And again, there's a lot of different methods, accrual versus cash. Again, if you're part of a corporate group of companies, you're going to look at different ways of calculating that. And again, you're going to look at different benchmarks, whether it's, looking at the months last year for comparison or looking at January, February. That's going to be the most difficult part of this.